to commercial marine insurance. Now, you're thinking of water when you think of the word marine. In insurance, marine actually is more associated with mobile than it is with water. The exposures that are going to be covered on the water are going to be only the ocean marine coverages. So this is when you've got either an import or an export. It's called ocean marine, and this is for property over water. Primarily, most of the commercial marine insurance is actually not involving water at all. It's going to be for property that is either on the ground or in the air. This is going to cover 4 different categories: domestic shipments, which is going to be the largest section of total policies covered of all insurances. Instrumentalities of transportation and communication, things like bridges, tunnels, pipelines, cell phone towers, etc. These are going to be covered. Commercial property floaters and personal property floaters. So what is a floater? A floater is something that covers mobile property. Typically, these are going to be on an open perils basis without any territory listed specifically, so they're going to have worldwide coverage. So we're going to be testing mostly on the commercial inland marine floaters, so that's what we're going to go over here. The first one we're going to go over is going to be an accounts receivable floater. In this case, whenever you have receivable records, these are very valuable to a business, because in an instance where somebody's not paying, you have to produce the records so that the liability is clear to the other party so that you can get that paid out. So they require, when not in use in these cases, to have coverage under this in case there was a fire or some other type of peril. You do have to have them in use for that to be covered. Otherwise, they have to be put away in a receptacle. So if you went away for the weekend or overnight and the peril happened and it wasn't in the receptacle, then there would be no coverage there, because this is a warranty. This is stating that you're putting special rules in place that would void out the policy just if you didn't follow them. The next section here is a pretty big section. This is typically excluded on all property policies, so therefore this is where you would typically cover this exposure for any bailee or customer liability. Bailment is going to be defined as the delivery of property of the owner, known as a bailor, to somebody else as a bailee, to be held for a special purpose and then returned. So a bailee coverage form are used to cover the losses from the insured perils to the customer's property that is in their care, custody, and control, right? So this is going to be for exposures like dry cleaners, laundries, repair shops, furriers, warehouses, right? All these things are going to have those special bailee or customer liability coverage exposures, and this is where this is going to typically be covered. Commercial article floaters, this is for the owners of commercial cameras, instruments, theatrical property. Those types of things are going to be for when they're transporting them around for like displays or shows. And so this is going to cover these people's equipment when it's in motion, no matter where it is in the world. Next one is going to be contractor's equipment floater. This is going to be for coverage in the U.S., its territories, possessions, and Canada, but not in Mexico. This will cover your equipment while it's in use, whether you're renting it or whether you're owning it. It also covers it in the process of transportation to and from the job and storage in between jobs, as well as when it's being used on the job. So this is going to be written on a named peril or open perils basis. The large items are covered usually with a blanket amount for special, less expensive items, but the large amount ones are going to be usually scheduled specifically. The only thing that will cover intangible property such as electronic data, is going to be under an electronic data processing commercial inland marine floater, also known as an EDP policy. This not only covers the data, but it covers the hardware and the media that includes the data there. Equipment dealers, this is specialty daily coverage for agriculture and construction dealers for servicing the equipment. Say those threshers that need to be brought in for an overhaul on their machinery, those can be covered under equipment dealer coverage under a commercial marine floater. The next one we're going to talk about is an installation floater. So this is going to cover from whenever the item has been picked up, such as a large air conditioning unit that goes on top of a building. It's going to cover it from wherever it's picked up. Then it's going to be covering that all the way through delivery and installation and testing until it's been accepted by the owner. The next one we're going to talk about is a jeweler's walk. This is going to cover the insured's merchandise, anything that they hold for sale as stock, as well as their Bailey coverage and for things that are temporarily on display. Next one we're going to talk about is signs. This is the majority of all sign coverage is going to be under commercial inland marine floaters. Typically, you're only going to be covered up to $1,000 under most property policies. So this will give open perils coverage for the insured signs, specifically insured worldwide, including all different types of signs, including neon, fluorescent, automatic, mechanical, jerry dome, whatever, as well as the Bailey coverage that might be in place if it's going in for servicing. Valuable paper and records. This is going to be the same as what we talked about with accounts receivable. This is going to be the standalone option versus what was available under the BOP policy as an endorsement. It also will have that receptacle warranty. Typical insurance for physicians and surgeons equipment. This was for a lot of mobile equipment. They used to call this black bag insurance because the doctors, when they made house calls, would carry everything that they needed for doing those house calls in a little black bag that they would take around with them. Nowadays, they're going to cover individuals in the medical or dental profession for loss to valuable medical and dental equipment, materials and supplies, including office equipment, furniture, and improvements and betterments, either on premise or off premise. This is not intended for hospitals, schools, or other institutions, but if you've got a clinic where you've got equipment that needs to be going from one location to another, especially in rural areas where there may be, 6 or 7 clinics covering a 700 or 800 square mile area. In that case, right, you may not be able to keep the equipment at each of the facilities, and you got to take it from place to place. And this would be able to cover that equipment when it was going from place to place. And then the last and largest section of commercial marine inland coverage is going to be carrier and transit coverage. This is the oldest form of inland marine coverage. Transportation coverage is available to cover the exposures of the shipper, the carrier, or the consignee of the goods. So the 3 parties that are going to have financial interest in carrier and transit coverage: the shipper, this is the person or company that is sending the goods; the consignee, this is the person or company that is receiving the goods; and then the in-between, which is going to be the carrier, the company that transports the goods. There are 3 different types of carriers. There's common carriers, transporting the property of anyone that hires them. Examples would be FedEx, UPS. Contract carriers, these are going to be companies that only transport property of others for which they have a written contract or have been hired that directly. Examples would be home or office furniture movers. And then private carriers. These are any companies that transport their own goods. Examples here would be Target, Walmart, Amazon. Those would be private carrier options. The carrier is going to be considered responsible for the safe delivery of their property, and therefore common carrier cargo liability is going to cover that carrier's legal liability for any damage or loss to the property that is in their care, custody, and control for the transportation. So this is basically bailee coverage for the carrier, so that when they're transporting the goods safely, it is going to be covered, and if something does happen, that it will be insured. Motor truck cargo policy. This is going to be on two different forms. One is going to be a trucker's form. This is typical for common carriers. So they also call this commonly common carrier cargo liability. And then the other type is going to be an owner's form. This is typically those that are shipping their own goods on their own trucks. That's for the owner's form. Transit coverage is usually going to be under two different types. It's going to be an annual transit form or a trip transit form. So the annual transit form is going to be for all coverages for all shipments from that carrier for the entire year. It's going to cover all exposures for everything in transit for the entire year. And then the trip transit form is typically used for those situations in which they are only going to be covered for that specific trip, right? So whenever you buy that special bear, stuffed bear for Christmas for your daughter, that one shipment that gets the bear to you will be covered in that case. All right, time to do some review on Chapter 12, Commercial Marine Insurance. Number one, which statement is generally not correct regarding inland marine policies? A, instrumentalities of transportation and communication are insurable. B, many inland marine policies also cover the bailee coverages or exposures of the business. C, mobile equipment such as bulldozers, forklifts, and road graders may be covered. Or D, buildings and personal property at fixed locations may be covered. So the incorrect statement is going to be D, building and personal property at fixed locations may be covered, right? Remember, marine means mobile, therefore fixed locations would not be able to be covered. Number two, inland marine insurance is commonly used to insure all the following items except. So what would not be covered by inland marine insurance? A, household furniture. B, accounts receivable. C, theatrical property. Or D, tunnels. In this case, household furniture as fixed personal property would not be covered typically under inland marine insurance. Number three, which of the following forms provides coverage to dry cleaners for the coverage for the property of their customers? Is this called A, customer's property liability policy? B, customer's protective liability policy? C, customer's property policy? Or D, bailee liability policy? D, bailee liability policy, also sometimes called customer liability. That one is going to be the correct answer. Number four, which floater would insure the cargo being transported by an independent truck owner? Is this going to be A, trip transit policy? B, bailee customer? C, motor truck cargo trucker's form? Or D, an installation floater? All right, so for the common carrier cargo, this is going to be motor truck cargo trucker's form for an independent truck owner, one that's not working for a company like Amazon or Target. Number five, the motor truck cargo policy. A, insures the truck carrier for liability for losses to cargo. B, covers any loss to cargo in transit regardless of whether the carrier is liable for the damage. C, insures the shipper for all incoming or outgoing shipments during the policy term. D, provides coverage for a shipper on a single shipment of goods. The answer here is going to be A, insuring a truck carrier for liability for losses to cargo. Number six, the installation floater covers property in all the following situations except. So when would it not cover on an installation floater? A, at a store location awaiting the installer to pick up the property. B, in transit to an installation site. C, while being tested. D, while being installed. So the liability does not start under the installation floater until after it's been picked up. So A, at a store location awaiting the installer to pick up the property would not be able to have any coverage. Number 7, the physician and surgeon's equipment floater is going to provide coverage A, on premise only, B, off premise only, C, both on and off premise, or D, on equipment in a hospital. Correct answer here is going to be C, both on and off premise. And then number 8, a fire is a huge exposure to the valuable paper and records, and insurers require that they be in a waterproof container when not in use. What is this condition called? A receptacle warranty, B, a container requirement, C, a valuable paper warranty, or D, a fire protection warranty. The correct answer for this is going to be a receptacle warranty A. And that's going to be the end of chapter 12.